Fed will hike rates tomorrow, and our expectation is they will hike in December as well. We're penciling in about 3 hikes in 2019, but you're absolutely right. There is a chance that the Fed actually leans more dovish. And the decision that the Fed has to make is, does it let an already strong economy keep running, or does it come in and hike at an accelerated pace and risk a recession? I think the Fed, and Jay Powell has indicated that he's dovish as well. When he spoke at the Jackson Hole Summit back in August, he talked about the fact that inflation is not accelerating beyond the 2% limit. And he also talked about Alan Greenspan back in the 1990s, where Greenspan went against conventional thinking, and he correctly sensed that new economy productivity would keep inflation low.
So does that dovishness, Niladri, cause you maybe to think twice about your prediction of 3 interest rate hikes in 2019?
Yeah, I think there's a real chance that the Fed does some kind of a pause or indicates some kind of a decision making in their trajectory where they move the dots lower. So we'll see how that goes. And if that does happen, then we think risk assets will make a strong bounce back, especially in emerging markets.
Sylvia, how big of a threat is the Fed and what it does to what's going on in the markets right now?
Well, so as we were all sort of saying, I think that, right now the economy is strong. Business sentiment is at an all-time high. Household sentiment is at an all-time high. Unemployment is at an all-time low. The economy looks strong and growing. So I think that, the Fed so far has been and has indicated that it will continue to be accommodative. So, although these hikes are sort of the most aggressive hikes that we've seen in about a decade, they do seem to be accommodative, and the market does seem to continue presenting opportunities and risk assets to investors.
So Sylvia, let me turn to something we discussed in the last hour with Robert Shiller. He seems to believe that investors, broadly speaking, have lost their healthy skepticism about the pace of corporate earnings growth, which of course underpins to some degree or another what stocks do in terms of their prices. Talk me through that a little bit. Do you see the same thing? Are they too ebullient, too exuberant about the possibility that corporate earnings are just going to keep chugging along?
It's certainly possible. I mean, look, we saw the markets last week pretty much just completely shrug off tariffs and trade wars, and we see a lot of that continuing into this week. So, and I think there is some good reason for that. Again, just going back to the economy, the jobs numbers, 3Q earnings are expected to be very good and sort of very healthy, and a lot of sectors this year have performed and continue to outperform. Healthcare, tech, energy. Although there's some pullback on tech now, but it's been a strong year for the S&P. It's been a strong year for the Nasdaq, for the Dow, and I think investors again are holding on to sentiments of corporate taxes continuing to play out in the marketplace, deregulation continuing to play out in the marketplace, and companies really starting to benefit from those things in the bottom line over the next few quarters. So I think part of the sentiment of optimism comes from a lot of tailwinds into large cap corporations.